When you're on the journey to homeownership, the financing route you choose can significantly impact your experience and long-term financial health. Two popular options you'll encounter are conventional home loans and FHA loans. Both have their advantages and disadvantages, and understanding these can help you make an informed decision that aligns with your financial situation and homeownership goals. What is a conventional loan? A conventional loan is a type of mortgage that is not insured or guaranteed by the federal government. These loans are typically offered by private lenders such as banks, credit unions, and mortgage companies. They come in two main types: conforming loans, which adhere to the loan limits set by the Federal Housing Finance Agency, FHFA, and non-conforming loans, also known as jumbo loans, which exceed these limits. Pros and cons of conventional loans. Conventional loans often come with lower interest rates compared to FHA loans, especially if you have a strong credit score. Additionally, once you reach 20% equity in your home, you can request to have private mortgage insurance, PMI, removed, which can save you a significant amount over the life of the loan. Conventional loans offer more flexibility in terms of loan amounts and property types. They can be used for primary residences, second homes, and investment properties. This flexibility also extends to down payment options, with as little as 3% down for qualified buyers, although a 20% down payment allows you to avoid PMI. Since conventional loans are not government-backed, they often have a quicker processing time. This can be beneficial if you're in a competitive market where timing is crucial. If you're buying a more expensive property, conventional loans offer jumbo loan options that allow you to borrow more than the conforming loan limits. To qualify for a conventional loan, you generally need a higher credit score, typically around 620 or higher. Lenders also look for a stable income history and a lower debt-to-income (DTI) ratio. While it's possible to get a conventional loan with as little as 3% down, to avoid PMI, you'll need to put down at least 20%. This can be a significant barrier for first-time homebuyers who may not have substantial savings. If your down payment is less than 20%, you'll be required to pay PMI, which can add to your monthly payment. Though you can remove PMI once you reach 20% equity, it still represents an additional cost until that point. Conventional loans often come with stricter appraisal and property condition requirements. If the home you're purchasing doesn't meet these standards, you might face delays or need to negotiate repairs before closing. What is an FHA loan? An FHA loan is a mortgage insured by the Federal Housing Administration, FHA, a government agency that provides backing for loans offered by FHA-approved lenders. These loans are particularly popular among first-time homebuyers and those with lower credit scores, as they offer more lenient qualification requirements. One of the most significant advantages of an FHA loan is its lenient credit score requirements. Borrowers with a credit score as low as 580 can qualify with a 3.5% down payment. Even those with scores between 500 and 579 may qualify with a 10% down payment. FHA loans require a down payment of just 3.5% for those with a credit score of 580 or higher. This lower down payment requirement makes homeownership more accessible for buyers who might struggle to save a larger sum. FHA loans offer more flexibility with DTI ratios, which is the percentage of your monthly income that goes towards paying debts. Lenders may accept a higher DTI ratio compared to conventional loans, making it easier for borrowers with existing debts to qualify. While FHA loans do have property standards, they tend to be more lenient than those for conventional loans. This can be beneficial if you're purchasing an older home or a property that might need some work. Unlike conventional loans, FHA loans require mortgage insurance premiums for the life of the loan if you put down less than 10%. This includes an upfront MIP, which can be rolled into the loan, and an annual MIP that is paid monthly. These premiums can add a significant amount to your overall loan costs. FHA loans have lower loan limits compared to conventional loans. This means that if you're buying in an area with high property values, you might not be able to borrow as much as you need. While FHA loans are more lenient than conventional loans, they still require the property to meet certain safety and livability standards. If the property doesn't meet these standards, it may not qualify for FHA financing, potentially limiting your options. Because FHA loans involve more paperwork and government involvement, they can take longer to process. This might be a drawback if you're trying to close quickly in a competitive market. When deciding between a conventional loan and an FHA loan, it's important to consider your financial situation, your homeownership goals, and the specific property you're looking to buy. If you have a strong credit score and can afford a larger down payment, a conventional loan may offer lower overall costs and more flexibility. However, if your credit score is on the lower side or you're struggling to save for a down payment, an FHA loan might be the better option to get you into a home sooner. Consider the long-term costs of each loan type. While FHA loans allow you to get into a home with a smaller down payment, the lifetime mortgage insurance premiums can add up. Conversely, while conventional loans may require PMI initially, it can be removed once you reach 20% equity, potentially reducing your long-term costs. If you're buying a higher value property or considering a second home or investment property, a conventional loan may be your only option due to the higher loan limits and flexibility. On the other hand, if you're purchasing a more modestly priced home, an FHA loan could provide the support you need with a smaller upfront investment. If you're in a hurry to close, conventional loans generally offer quicker processing times, which can be a crucial factor in competitive housing markets. Both conventional and FHA loans have their unique benefits and drawbacks. Your decision should be based on a careful assessment of your financial health, long-term goals, and the specific home you intend to purchase. By understanding the pros and cons of each, you'll be better equipped to choose the loan that aligns with your needs and sets you up for successful homeownership. If you're still unsure which option is best for you, it's always a good idea to consult with a knowledgeable mortgage lender or financial advisor. They can provide personalized advice based on your unique situation. Want to learn more? If you found this breakdown helpful, be sure to check out my YouTube channel where I dive deeper into topics like this, offering tips, advice, and insider knowledge to help you navigate the world of real estate with confidence. Don't forget to like, subscribe, and hit the notification bell so you never miss an update. Remember, the right loan can make all the difference in your home buying journey. Take the time to explore your options, ask questions, and choose the financing that best supports your path to homeownership. Happy house hunting!